please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
10,050, 55 is where the market's opening.
All these regulatory measures have all worked in favor of organized sector players like Titan.
We are looking at growths even in the near term, more in the region of around 10%. So I think we'll have to outperform the market.
On valuations, India has been in what we call the expensive four club, which is the four most overvalued markets in the region.
From a high on the Nifty of 10,155, we've basically lost, 40 points.
What's been interesting today is that on the index, we had a bit of a downtick. After that, there was a sharp recovery. That got sold into and the market made intraday lows. And now there's been quite a bit of recovery that you're seeing.
Wild swings on Dalal Street as bulls come out slightly on top. Sensex gives up 33,000, but the Nifty holds on to the 10,100 mark.
Big voices on CNBC TV 18 warn of near-term pressure. Credit Suisse's Shakti Shiva says valuations and earnings are still a concern. Abhay Lajewala of Deutsche Equities expects the markets to find a floor only at around 9,400. CLSA's Lawrence Belanco sees support at 9,700 levels.
FMCG stocks gain in trade. Stocks like Godrej Consumer, HUL and Colgate close in the green. Managements of Titan and Dabur tell CNBC TV 18 they are optimistic on driving up market share going forward.
Banks remain under pressure. The Bank Nifty closes in the red after a volatile day. Private banks drag. ICICI Bank, HDFC Bank and Yes Bank lead the fall. NBFCs and PSU banks outperform.
The GSPL stock slumps after the company buys over a 28% stake in subsidiary Gujarat Gas. Closing over 5% in the red, the company's management clarifies that despite the increased debt, the stake buy underscores higher usage of gas. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talk Back. This is the show where we get you all the 8 hours of trading action, and today was a really choppy one in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Hi Lata, and over the next 30 minutes, as you say, we'll get our viewers the top 5 market stories and our experts will answer your questions. So joining us today to help us answer the questions that you send to us are Mayuresh Joshi of Angel Broking. We also have Mitesh Thakkar on the charts. Gentlemen, thanks very much, both of you, for being with us here. But before we come to the both of you, let's take a very quick look at what really happened in markets today. I mean, to all those people, all those traders who typically say, well, bring on the volatility, it's a trader's delight. I think today, I don't know what to say. Just, choppy on top of more choppiness. Lata.
Yeah, I don't know. It must take an extraordinary trader to be able to make money in such whipsawing markets. This is how we began the day, with Wall Street giving us large cuts and Asia also looking a little quiet. We were preparing for a negativity akin to yesterday. We didn't expect to do much better than yesterday. But as Europe opened and we saw that recovery, there appeared to be a spring in the step for the bulls here as well. So it was actually, if you, at the end of the day, it was all of, 50 points that the Nifty was chopping around. I think 10,150 got severely hit down. So that what you call 200-day moving average proved to be a resistance, but it didn't go much down either, although it did visit 10,055 and 60 for a bit. It largely remained around the 10,100 mark and has closed well above that. The PSU banks also, the PSU banks remained under pressure, but the Bank Nifty moved in, well, not 100 point actually, it moved in a 200-point range, and therefore there was more choppiness over there, but one stack did remain under pressure, and that's the PSU bank. So, it was a more of the same market, and of course we will ask our experts, but it did look like the market continues to suffer from fear of heights, as it were.
Okay, I mean, and absolutely. So market failing to sustain but by close, not looking all that bad. Let's quickly tell you what happened as far as stocks are concerned. I'll start with sectors as always. IT, pharma, PSU banks. I mean, in terms of spots of strength, but nothing large. Maybe the IT index was the only one which was up over 1%. Sectors which were weak, private banks, energy sector, and the real estate space. And we'll come to stocks in a bit. Large cap stocks which did well, Infratel, you had Tech Mahindra, Eicher, Tata Steel, Sun Pharma, Bosch, which looked actually between 2 and 4.5%. Higher. Losers, IOC, GAIL, something like an ONGC. Actually, there were a lot of PSU names which were on the lower side. Big gains, broader markets, Reliance Infrastructure, JSPL. JSPL was at about, 220, 225. It bounced quite a bit. Marico, SAIL, BEML. From 2,000 levels, it cracked under 1,000. It jumped towards close today. Birani Industries was another one which was up 5% or so. Then you come to losers, broader space. HEG, all in the same group, almost. HEG, Graphite India, Goa Carbon. And then you had something like a Vedanta and GSPL, which had some news flow, which were lower as well, all on decent volumes.
Okay, well, Vedanta can be forgiven because it was a 21 rupee dividend. So maybe if you subtracted that, it behaved more like the other metal stocks. But take your point on GSPL and we will delve into that story a bit. But let's get to our experts and ask them how seriously we should take today's resistance to the 200-day moving average, or whether we should take the bounce up a little more seriously. Mutesh, that question to you. Which way next? Break up, break out, or break down?
Yeah, good evening, Lata. I think both of the movements should be taken seriously. I think 10,050 was an important swing pivot, which the market, made a temporary low in December 17, early December 17. So very strong pivot. That's the area from where the entire movement to 11,000 started. And having said that, I think the 200 average, the importance can't be ignored. So while we have bounced back from a support, I think if we start getting past the 200 average, stabilize above it, then I think we can have a much more stronger pullback. So in that sense, I will be aggressively long only once the market is about 10,170, 75 zones, and look for a minimum target of 10,300, 320, maybe even higher.
Okay.
All right. So that is your ever interesting and watchable Raghuram Rajan there describing what's happening in the US. Let's move on to the second big story of the day. Big voices on CNBC TV 18. Sakti Seva of Credit Suisse says India, she maintains essentially her view on it, underweight on India's valuations and earnings are still a concern according to her. Abhay Lajewala of Deutsche Equities expects the market to find floor at about 9,400 Nifty, and CLSA's Lawrence Blanco sees support at 9,700. He's reserving his view that eventually in the medium term we will hit Nifty target back at about 12,000 or so. Let's listen in to what these experts had to say. Interesting that suddenly the view is shifted from 10,000 plus kind of levels where the market should bottom out to now 9,700, 9,400. Listen in. We're right back.
We're still underweight at this point in time. The reason for being underweight, as you know, are firstly valuations and secondly earnings revisions. So on valuations, India has been in what we call the expensive four club, which is the four most overvalued markets in the region. The premium has been above 50%. India so far this year is now the second worst performing market, and as a result the valuation premium has actually come below 50%. So we are looking at India, but it's still in our expensive four.
Unlike the last 2 years, it's not as much as a top-down market. It's likely to be a far more bottom-up market. And we think that the sectors that will take leadership are going to be the ones where there is certainty to earnings growth. If your valuation reverts back to your 10-year average of roughly about 16 times or so, and if you assume earnings growth of roughly about 20%, then around 9,400 becomes a floor for the market.
And it is disappointing we've broken the 200-day, and I'm not getting any signs of slowing downside momentum at this stage. So your next support area is basically the August 2017 and September 2017 lows around the 9,680, 9,700 area. I mean, even if we fall down to that 9.7, it is worth bearing in mind that the longer-term setup for the Nifty, and that's a longer-term breakout when we cleared the 2015 and 2016 highs in March 2017, that still gives us an ultimate upside target of 12,000.
Well, those were some numbers that, as Prashant said, clearly indicating that across several brokerages, the bottom has now fallen, or the expected bottom has fallen to between 9,400 and 9,700. But yes, 12,000 also on Belanco, CLSA's Belanco's radar. With that, let's come to the third headline of the day. FMCG stocks were up in trade today, with the Nifty FMCG up nearly 0.5%. That makes it a slight outperformer. Stocks like Godrej Consumer, Hindustan Unilever, Colgate also closed in the green. Meanwhile, among consumer companies, Titan and Dabur spoke to CNBC TV 18. Both managements said they're optimistic about driving up their market share going forward. Listening to Sunil Dugal of Dabur and Titan's Bhaskar Bhatt.
We're trending at around 16%. We gain share every quarter, and I think next quarter and subsequent ones we should see further acceleration in our market share gains. So we're in a pretty sweet spot. We are looking at growths even in the near term, more in the region of around 10-odd%. So I think we'll have to outperform the market. The market tailwinds are not there. We'll have to do better than what the market is growing at.
We had been targeting a 10% market share, which is more than doubling our current market share in 5 years' time. Now, if that has to happen, you have to grow at least 20 to 25% annually every year. And we are confident of achieving that growth rate. Combined with that, the higher growth rate in studded jewelry is what we are targeting.
Okay, those are two marquee managements talking to us earlier in the day. Twitter user Satya Prakash has sent us a question on Titan. He's got 500 shares of Titan. He's paid 430 rupees each. I mean, the price is almost 900. He says he can hold the stock for up to 2 years, wants to know the long-term prospects. He's already doing very well. Mayuresh, what would you tell him?
Afternoon, Prashant. I think with everything that has been happening in the gems and jewelry space, Titan has held up more in terms of the pedigree of the management. And again, the large expectations as the management put forth, specifically in the jewelry business, even if one assumes a 22 to 25% growth, along with studded jewelry having a very reasonable share, the margins that they reported in the quarter gone by on a consolidated level at 9.9% should show an upward tick. Having said that, again, the grammage sales were again on the higher side, as well as their other business model in terms of fast track and the watches segment actually on the EBIT front did quite well. So on the EBIT front, I think the margins should hold up. Their Golden Harvest scheme is doing extremely well. The franchise-based model and the rollouts should augment its operating leverage as well. And again, I think the earnings estimates, if one assumes the 22 to 25% revenue growth, should reflect very, very positively on the bottom line. So I think it's a clear hold from my side if the investor has a couple of years' time horizon.
Oh, right. Thanks for that. Let's get to another FMCG company. TV Ravindra has 375 shares of Emami. He bought them at an average of 1,000 rupees, has been holding the stock for a while, and he wants to know the future in 6 months. Okay, I think if it is 6 months, then it should go to you, Mitesh. 1,000 rupees for Emami.
It's very close to its buying price, and the stock actually did give a breakout in January, only to come back gave a breakout in December, only to come back in January. I think the stock has kind of aborted the uptrend, so it might just do consolidation between 925 to about 1200. So in that sense, I think it might not do much. If it's a 6-month trade, then maybe you should look at something else. Maybe accumulating Reliance marginally on declines could be a better idea. So in that sense, I think my sense is that it might go to 920 and just be back to about 1200. So it will not give him much absolute returns over the next period, 6 to 8 months.
No, but still, if his buy price is 1,000, then 1,200 is not bad. And even your downside, I mean, the risk reward seems to be on the basis tilted for reward, you would say, since his buy price is so attractive.
I would agree with that, Lata, but I think what I'm saying is that he might get 20% in this, and there's a chance of, if you possibly correct or if you possibly buy into Reliance or Mahindra for the next 8
All right, fair. So, fair enough. Fair. Fair enough. I take your point. Okay. So Reliance or Mahindra is what Mitesh is recommending as a better buy where the risk reward will be more suited to you.
With us here on Markets Today Talk Back, we've been running you through what happened as far as today's trading action is concerned. As we always do, Mayuresh Joshi and Mitesh Thakkar are with us to answer your questions. We got through the top 3 stories of the day, so let's get to the 4th one now. The bank Nifty essentially was weak. It closed in the red after a volatile day of trade. PSU banks were the main culprit, ending the day lower. The PSU banks actually ended the day higher. Private banks were laggards today, so a bit of reversal in fortunes compared to the last couple of days. We had the likes of ICICI Bank, HDFC Bank and Yes Bank leading the fall. NBFCs, though, managed to do a bit better. Bajaj Finserv was up 2%, HDFC was up nearly 1% and 0.5%, and Mahindra Financial was up nearly a full 1%.
Yep, there has been a growing view, and that's also Credit Suisse view since we spoke to Sakti Siva, that NBFCs need not lose out in a rising rate syndrome, because now banks are also locked into this MCLR, marginal credit lending regime.
For a year.
So, so anyway, the higher cost of money will have to be passed on.
Correct.
So there is not that they're not losing out to banking competition as they would have at an earlier time. That's at least Credit Suisse's view. For whatever reason today, NBFCs did well, private banks did badly, PSUs continued to do badly. Okay, with that, let's get to someone who has a question on a bank. Anand Upadhyay is calling us from Uttar Pradesh with a Yes Bank question. Anand, please go ahead.
Yes, ma'am. Thank you for this call. Ma'am, just I am having 50 shares of Yes Bank bought at a rate of 315.
Okay.
But what next we will do with because these days nearly all bank is not doing well. What I am thinking.
Do you need the money? Do you want to book out profit, or you just want to know whether you are in the right share or whether you should move out?
My views are mostly long term.
Long term. Okay. Mayuresh?
So, Lata, I think with all the problems that the bank undergone, specifically related to the divergence for the RBI reported numbers, along with what we probably saw in terms of elevated GNPAs, elevated credit costs, I think the bank is having a course correction done. The second element in terms of their CASA actually having a very strong accretion over the last few quarters is very, very evident, both in terms of the strong CASA growth that we probably witnessed. And again, a large element in terms of their provisioning going up, that should normalize, which basically means that the credit costs should probably plateau out over the next quarter or so. Having said that, my own sense in terms of the advances growth, both in terms of the retail side of lending, should grow at a very fast compounded pace, and that itself should give it the accretion in terms of an earnings perspective. So if the investor has an horizon of more than a year, which he has, my own sense is that he can hold on. Yes, there are issues surrounding the banking sector at this point of time. The new RBI regulations will have elevated NPA provisioning, but that largely has been factored into the price, in my opinion. So yes, hold on to the stock, and I think the stock can do pretty well over the next 1.5 to 2 years.
Okay, the answer is yes.
Okay, we have a question on an NBFC now. Raj has 1,000 shares of DHFL, which he bought at an average price of 450 rupees. He wants to know if it is a good time to hold this particular stock, DHFL, or should he switch into another name? He can hold on to the stock for the next 5 years.
Oh.
Okay, so that's a long runway that we're talking about. Mayuresh, what would you tell him?
So I have been positive on this stock. I remain positive, both in the sense that the kind of raising that they've done, the capital adequacy remains extremely strong. They're also extremely well placed in terms of a very strong advance growth. The third element in terms of them maintaining their NIMs is more or less there, because the kind of varied borrowing mix that they have probably helps them mitigate the risks from rising yields. And the fourth element, obviously, in terms of asset quality, the asset quality has remained extremely stable. And my own expectations is that the stability in terms of reported asset quality numbers should very well continue. So even on an adjusted price or a price to book parameter, the bank looks pretty well poised, or the NBFC looks pretty well poised to probably leverage its book pretty well. So yes, I think it's a clear hold from my side. 5 years, pretty long period, but yes, at least for the next 1.5 to 2 years, the hold can continue from the investor's perspective.
Okay, so continue holding on DHFL. Let's get to the final headline of the day. The GSPL stock slumps after the company buys over 28% stake in its associate company, Gujarat Gas, for 3,200 crore rupees. The stock itself for GSPL, that is closed over 5% in the red. The company's management spoke to CNBC and clarified that despite the increased debt that it will take on for the stake buy, the purchase itself underscores the higher usage of gas. Listening to the CFO, we are coming back with questions.
GSPC, yes, it wants to cut down its stake in GGL, and it comes at a time when we are also enjoy a lot of synergy. So it makes a lot of sense to buy this asset at this point of time. In the short term, we'll have to take some debt. In fact, if you remember, when we took over GGL from the erstwhile BG, the same thing had played out that time also. Yes, in the short term, any buyout would require some amount of debt infusion. But given our strong balance sheet and strong cash flows, I think we can easily take that debt. And I think we, in the past also, a lot of investors have been telling us that it would make better sense if GGL were to be under the full control of GSPL.
All right, that's the management at GSPL. We've got a question now. Deepak Bhatia has 2,350 shares of the company, Gujarat Gas, purchased at 485 rupees a share. He's been holding the stock for the last 2.5 years. Wants to know if he should hold or sell. Mitesh, what would you tell him?
Yeah, so I think this is one stock where the long-term chart still remains positive. It's been kind of, facing some supply at the 850, 660 zone. But I think overall the chart is quite positive. I think unless until 700, 680 is being broken, I would maintain a positive bias. And I think that once 860 is crossed, then I think, you might see the stock try to head towards 990, 1000 zone.